All right, everyone, welcome aboard. Welcome aboard. It's 20th of March 2023. Welcome from Noor CM Academy. This is Mahsin Khan with you. Noor CM Academy is the subsidiary of NCM Investment in Kuwait and UAE under their partner Shua Capital Group. So let's get to know each other. We're going to start shortly. Thank you for joining us today. Really appreciate that. So we've got a few members. Let's get to know each other. Please introduce yourself. We've got Shadi Abu Umar. He's a civil engineer. Thanks for joining us, Mr. Shadi. So we have Mr. Anand, Mr. Afzal, Mr. Ahmed Al Awad, Mr. Omar Sharif, Mr. Randir Viral Shah. And if it's okay with you, if you're comfortable, go ahead, open your cameras. It will be also nice to see you. So today's webinar is about navigating three key strategies in the world of financial markets. Before we dig deep into what are the three ways, we're going to have an introductory conversation very soon. Thank you, Mr. Omar Sharif. Thanks for sharing. So Mr. Omar Sharif is an event management specialist. Thanks for introducing yourselves. Now, today's webinar, it requires that you do have a slight background in the world of online trading. So we expect that to happen. This session is being recorded and its recording will be available at Noor CM Academy YouTube channel. You can go there. If you missed if anybody who's not with us today, they can watch the recording again. We've got Mr. Afzal Ahmed working for a bank, Ahmed Al Awad mechanical engineer, mashallah, great. Nice to see you all. So this session is being recorded. At the end of today's session, we're gonna have your question answers as well. In Zoom, if you look at the reaction section, you can raise your hand at the end of session, okay? So I love question and answers, so we're gonna host them. Now, before we talk about our content, what's our official material, let's talk generally, okay? We're gonna talk generally right now. Everyone went through 2019 COVID crisis, and COVID crisis, it triggered something that people are looking for additional sources of income. All right. Everyone faced that. People had hard times. But what exactly is trading in easy words? I'm going to share the whiteboard with you in the middle because it's important to have a vision. Okay. In very easy words, trading is nothing more than act of selling and buying goods. That is the conventional term, right? Act of buying and selling goods. That's what's considered as trading. But few things that are quite valuable, okay, they have to be traded through certain exchanges. Now, if you were to look for buying a real estate or you wanted to sell a real estate, you always need something called a financial broker. Sorry, not a financial broker. You need a broker. If you want to sell your used car, you want to buy your own car, you need a broker to assist you. Now, it's important to have a vision. To me, online trading is just like an online business because you are buying and selling goods that are valuable. Online trading world introduces you to the precious metals markets, energy markets, currency markets, etc. That's what it is. But it's important to have a vision. Now, online trading, I'm repeating again, it's an online business. Just in life, how we have ladders to climb, whether it's a corporate ladder or academic ladder. I'm going to just illustrate it here for you. Please confirm with me in the chat box if you can see the whiteboard. We start in life in our academic career from a preschool, then we enter a school, then we go to high school, and then we go to university. That's how the structure is. It's a ladder. My way of delivering education and presenting information is a bit different because for me, it's important when you're attending any programs with us, you should have a vision, So I'm here to not only share the methodologies or what are the ways to trade the financial markets, but also to give you a vision. We've got high school here, okay, and we've got university. Similarly, in the corporate world, a person would start as an employee. An employee is a person who trades his time in exchange for a financial return. Okay, so employee is a person who is also a trader. But what is he trading? He is trading 40 hours a week for a fixed paycheck. Then we have something called a self-employed. Self-employed. Self-employed person is an individual who works for himself. It can be a professional lawyer. It could be an engineering consultant, accounting specialist, whatever. The issue here is that the self-employed people, they do work for themselves, but in order to generate revenue or in order to generate income, they must be available and give maximum number of hours. Now, of course, you see this, the ladder is climbing towards the upside. The more they go up, the more income increases. The third category is a business person. Business person is a person who has a system of operations, human resources, marketing, sales to generate them income. And the last one is the investor. An investor is a person, individual, or an entity who make their money work for them. Okay, now in the world of online trading, it is possible to acquire the next three ladders, and we're going to talk about this how. Okay, so let's go to the official slides. I'm going to share the presentation with you, and please let me know if you can see the PowerPoint. Everybody, can you please see the PowerPoint? Is it clear? Thank you, Mr. Afzal. Thanks for confirming. Mr. Umar, thank you so much. Thank you so much. So this is our subject and topic for today. Now, often people, now let's go through a disclaimer. Just very quickly, you can read it by yourself later, but financial trading, of course, it's a very risky business. Do visit our website to read the legal disclaimer. Okay, you should not invest money that you cannot afford to lose. Never invest car payments, rents, children education fees, medication bills. Don't do that. You know, only risk what you can afford to lose. That's so investing is quite highly risky. So just a quick disclaimer. So online trading, you know, it's a business that produces, it's for people who want to work part-time. Now, any of us, if we wanted to start a business today, and if you're a working person, you're doing a job from 9 to 5 or 9 to 6, whatever it may be, in order to start a business, you need a large capital. If I always say in my presentations and webinars or workshops that if you had access to $50,000, with this $50,000, it's possible to operate any small business from anywhere in the world. It can be UAE, Kuwait, US, Philippines, Bangladesh, India, Pakistan, wherever it is. But the $50,000 you're trying to begin a business with carries a lot of risks, and there's a lot of headache. You need licensing, you need staffing, you need recruitment, you have ongoing expenses, the rental, etc., etc. In the world of online trading, your trading platform, the trading program that you use for doing research and to execute orders, whether you're using on computer, you're using on a tablet, you're using on iPad or a phone, a trader's mobile phone, his device, his gadget is his shop, company, institution, whatever you want to portray it. So online trading in the world of currencies is approximately 24 hours, 5 times a week. I'm sure you're familiar with it, but maybe some new members are joining us who have no idea of what the financial markets exactly are. So we have to carry everyone together. Okay, so currency markets, they are 24 hours, 5 times a week from Monday to Friday. Okay, and it can be a part-time venture, it can be a part-time business. Since it's 24 hours, 9 to 5, a person could do a job, you know, take care of his monthly expenses, but 5 to 12, it's a trader or a future traders, hereby I don't mean by futures trading products, but a future trader, person willing to be a trader, they can determine their hours of work. And trust me, online trading is a business that requires hardly an effort of 5 hours a week. You heard me right, it's 5 hours a week if you wanted to learn about it. And we do offer practice accounts. I'm going to share a technique that's used by professionals at the end of session. So please stay with us along the session. We're going to disclose it at the end. All right. So it's part-time. You can decide your hours. You have the flexibility. Always there's an option of practice account. Whatever you learn from workshops or trainings, you can always execute and practice them for a limited period of time. So the important thing is, before you explore the world of online markets, let us say you have decided to trade in a specific trading product. It could be a currency, it could be a gold from precious metals market, it could be an index like NASDAQ, S&P 500, Dow Jones, or whatever. The most important thing, the first key step, before you navigate the markets, before you hunt for trading opportunities, it's always explore the dollar index. The dollar index, its symbol is DXY. Often its symbol, trading abbreviation, is DXY. All the countries globally, whatever they export, import, or any government financial decisions they make, they're always they're going to be in dollars. Okay. The first step is always explore the dollar index chart, trading chart. How is the dollar performing? And fundamentals. And how do we do that? How do we do that? You can use a trading platform. Okay. In our case, we offer MetaTrader 5. Okay. I'm going to share it with you. I'm going to share the screen shortly. So let's stop here and explore. This is a trading platform of MetaTrader 5. We do, our representatives, they do host trainings on this program at their premises or even online. So usually all the tradable products would come in something called a market watch. Okay. So you could analyze the dollar index chart here. How is the dollar performing? And you should have some basic charting skills. Or the other option could be that you can analyze the dollar index on TradingView, which is quite common and famous globally. So this is the dollar index chart. And a key trick is, usually when you see the dollar prices or dollar index prices going down, most often, not always, but quite often, and it's repetitive, all the other things such as cross currencies, they would push towards the upside. If you can analyze the chart, the dollar index chart, and its direction, where are its reversal points, okay, it's possible to execute your trading decisions on counter products. And another important thing is to know what are the upcoming events, financial events. Each and every country globally around the world, they disclose their economical performance, and economical performances, they can be a country's GDP, it can be interest rates, inflation reports, unemployment claims, etc., etc., etc. I'll try my best to use least technical words, and I'll try my best to, use a very understandable language. Okay. So knowing the fundamentals is something very important, or at least when you're in your trading career, you should know what time a high impact news will be released. What do we mean by high impact news release? Most countries, when they release their economical data, some data is quite important, volatile, it creates volatility, it creates strong movements in the markets. It's important to know when this economical data will be released. And how you can know that, you could visit our website. It's called ncminvest.com. Okay. And when you go to ncminvest.com, on the right corner, you have the burger icon. Okay. So you go to this burger icon, and here is a section called economical calendar. Now, I would suggest you write down this information that I'm going to tell you next. Okay. Once you go in the economical calendar, okay, you should go to show filters. Okay. When you go on show filters, you can probably select the news of important countries. You could here select some, let's say United Kingdom, United States, etc. Okay, here is the category. These are the important economical events. Statements or press conferences by central banks and their representatives, bonds and auctions, interest rates, etc. Just select all of them. And here is the volatility bar. Switch and change it to the red one. Okay. These are few key settings that you could use. So please make sure it's switched to red. Now, filter the results. Once you hit the filter, so the news will pop up. But since today, if it's blank, if it's empty, it means there's no vital important event that could create volatility in the market. So going back to the PowerPoint, going back to the presentation, your first step, the first thing that you need to analyze in the financial markets is the dollar index. What is it doing? What's expected, and the fundamental events. Second, and also one of the important keys is understanding the buyers and sellers. In trading, we call buyers bulls, and sellers, we call them bears. With technical analysis, what do I mean by this? What do we mean by this? I'm going to go again to, let's say we open our trading platform. I'm going to expand a chart. Okay, I'm going to expand a chart. This is a dollar-yen pair. American dollar being traded against the Japanese yen. I've chosen a 1-hour chart. If you watch very closely, the quantity of red candles, which are the negative candles or bearish candles, they are quite high. Okay, key point. If the quantity of red candles is more and the size and length of the red candles is quite big and aggressive, we could say, we can determine that the market is in a downtrend, or it's trying to fall, or it's trying to continue its direction towards the downside. All right, and vice versa. Now, if the market was supposed to go up, or if it's trending towards the upside, we want to determine, and there are many methods you can determine if the market's in up run, bull run, or it's trying to go up. For that, the important thing is opposite's going to happen. The quantity of red candles, it should be increasing. They should be more in quantity as compared to the red candles. So the quantity of green candles should be high, and also the sizes of the green candles, they should be aggressive enough. Since you can see here on the chart, the dollar yen, it's depreciating, it's declining since the last 4 days. And watch very closely, the ratio of buyers and sellers is less. Here you have a lot of green candles coming, and the sizes of these green candles are quite bigger, which is indicating that the market is trying to shift towards a strong downtrend. Then the market did try to stabilize. It did try not to continue the downtrend. They got stuck. Still, the red candles, their quantity and their ratio is more than the green ones. Okay, so there was a final try. Buyers did try to take over and reverse, but they couldn't. And you can see the following days, again, the quantity of red candles, they started to increase, and the sizes of green candles are much more aggressive, and market are trending towards the downside. Okay. I'll take everybody's question. Once we're done with the presentation, I'll take everyone's question. You can come over the microphone and ask. I'll unmute you. So please, just let's complete our presentation and topic. Take notes, write your questions down, save them, or you can type them in the chat box, and I'll address all your concerns. So this is understanding if the bears are in control, if sellers are in control, and the market, the reason the market goes up, okay, when you see an uptrend happening in the market, the main reason is that, there is fresh cash, fresh capital being injected. The fuel that the market needs to continue trending or moving towards the upside is the fresh injection of cash attracting new investments. This is what pushes the markets towards the upside. And this is also called greed. Because our session is short, it's our first session. So some things we may have to skip. Now, why do the markets start falling down? There are a couple of reasons. Because once the investors, smart investors who bought at the bottoms, okay, they want to cash out. When investors or traders, the people who are major stakeholders in the world of trading, they start pulling out their money, the prices, they start to fall and they start to collapse. And this is how we have the formation of red candles happening. So it's the, let's get the right drawing tool here. So it's the fear factor. Fear factor kicks in. Red candles are the indication. So people start removing their funds. So that's the reason the markets take a dump. So the first key strategy that we discussed is understanding the dollar index. Okay, you should check always the dollar index, and then you should look at the fundamental reports. Let's get the PowerPoint. Can everybody see the PowerPoint now? Can you all see the PowerPoint? Is it visible? Okay. So second, all right, thank you, Mr. Afzal, Mr. Omar, thanks for confirming. Mr. Vijay, thanks for confirming. All right. So second is understanding bulls and bears with technical analysis. All right. Now I explained you one of the most easiest way to see in the charts who is in control, bulls or bears, is by identifying the ratio of green candles with the red candles and the length and sizes of the candles. Another important method is that you use support and resistance levels. And I'll explain you what are the support and resistance levels. Let's share the screen again. Here. Support and resistance. You know, in the world of currencies, you know, it's like a table tennis. It's like ping pong. Most often, the ball has to go from point A to point B. Okay, most often, not necessary. It has to go to point A, then it has to go to point B and come back. Okay, now the lower line that you see here, it's called support. Okay, what is the definition, a decent definition on support? And I think even if you try to YouTube it, you won't get much definition how I'm going to give you today. Okay, support. Now, what's the definition of support? Support is an area or a place on the chart where the prices are cheap. Support is an area. Definition number one, support is an area where prices of an asset are considered to be cheaper. Second definition, support is an area where the quantity of green candles, it starts to increase. You would see large green candles appearing with aggressive sizes. So support is an area where the quantity of green candles increase. Support, the third definition, is an area where the buyers are in control. Or support is an area where the buyers take major control, because buyers are the people, or bulls, the traders who are bullish, they are the people who would try to push and move the prices towards the upside. Okay, this is one of the most easy and definition of support, you know, for if you're a newbie. Same, the opposite is for the resistance. Resistance is an area or a place on the chart where the prices of the assets are considered expensive. Okay, resistance is an area where the prices of assets are considered to be expensive. And you know, when thing is expensive, not only on the trading platform, trading chart, anywhere in our daily lives, even in shopping, when we go shopping with our spouses or by ourselves or with our family, if something's really too expensive or it looks overpriced, we don't buy it. So resistance area, people are not buying in that asset. They're not interested in buying that asset around this area. Hence, because no one's interested, the prices start to tumble slowly and gradually. So resistance is an area where prices are expensive. Resistance is an area where the quantity of red candles start to increase in number in comparison to green candles. Resistance is also an area where buyers are weak. I'll repeat again. Resistance is an area where buyers are weak. How we can know that at the resistance the buyers are weak? The green candles would be small. They would be compressed. They would be tiny, just like the trading platform here. If you see, let us suppose, let me get a drawing tool here. This area is approximately the resistance area here. Okay, you can see the length or the quantity of green candles. It's even less, but it's quite small. It's not that big as compared to these red lines. You see that? Okay, so resistance is an area where buyers are weak. If the buyers were really strong, if the buyers were strong, they would have broken and taken the prices towards the upside. Okay, let's go back to the whiteboard. So resistance is an area where prices are expensive. Resistance is an area where the buyers who bought cheaper, they take their profits. And drawing support and resistance is something really, really easy. It is always preferred. I am assuming everyone has a slight trading background. It's always preferred that you use a higher time frame, like a 1 hour chart or a 4 hour chart to draw support and resistance. So what's the easiest and quickest way? Go to a 1 hour or a 4 hour chart, zoom out on your trading platform. You zoom out and use this drawing tool here. You can see it up. If you cannot see this drawing tool, go to view toolbars and click on line studies. Now, I'm going to draw some key levels here and you can watch me how I do that. Okay, Control Y, I make the lines disappear. So here, this is the resistance. Okay, because the prices, they fell from this area. Do I have a support? If I hold the control key on my keyboard, left mouse click, I can duplicate the line. So I have a support here as well at the bottom, which is on 129. Now we are doing this demonstration only and only from educational perspective. Please do not take this analysis or this illustration as a financial or trading advice in any form. We have a resistance here. Then this area is also considered as resistance. Why? Because the prices, when they tumbled, they tried to go up and the buyers failed. They couldn't continue the trend towards the upside. So any swing point, another word is swing point, where there's a rejection, the bulls or bears, they couldn't take control, is considered as a support or resistance area. So you've got a resistance here as well. There can be multiple resistance. Okay, you have resistance here as well, and a resistance here as well. Okay, now, do we have more support levels? Do we have any support? We can say yes, we've got a support here, and we've got a support here. So these are considered as area of reversals. Okay, so this is a basic way to draw your resistance and support, and professional traders, they use these areas for their trading styles, and there are different kind of trading styles. There's scalping, day trading, swing trading, position trading. In our future webinars, we are going to cover these terminologies. Just we are giving you a vision today. We are just introducing to the trading platform, the company, and giving you some education that could help you in improving your trading methodologies. Okay, so last thing that's not part of our presentation is usually, I'll just say it very quick. At the support areas, you would see W patterns appearing and you would see M patterns appearing at the resistance. So another definition for support and resistance is an area where M patterns start to build, or it's an and support is an area where you see W formations forming. Like we've got here, you've got M pattern. you know. Then there's an M pattern here. Okay, you have M pattern here as well. This is resistance area. On the support areas, you get W patterns. Okay, here also as well. You've got a W pattern here as well. And now, here's the thing. The W, it's not always going to be a perfect one. It won't be always perfect. W can be like, let me draw it for you. Okay, one of the W's, it could look an ideal W. Okay, some W's, they can be like this. And some W's would be like this. Same goes for the M's. They don't have to be ideal or perfect in shape because markets are always changing. Okay, so far, how is the speed going on? Are you all catching up? Is the delivery of speed fine? Let's interact a bit. So far, we've learned the first key strategy is to understand the dollar index. Where is the mighty dollar going? What's its direction? Then we have to analyze within the first step, what are the important economical and fundamental high impact news that are going to happen during the week, during the month, or during that trading day that you're interested in entering the markets. Second thing was understanding the chart in the most easiest form, and we introduced you to the concept of the quantity of bull and bear candles, drawing support and resistance. Third thing, thank you, Mr. Afzal, thanks for your feedback. Okay, third thing, now we're going to talk about the methodology. Now we're going to talk about one of the methods that's used by traders. Can you all see the PowerPoint? Is the PowerPoint visible? A sample method that is used by professional traders. Okay. This is just for demonstration only. Now, let's get rid of the drawings here. I'm going to go on the insert, indicators, oscillators, and MACD. If you want to take a screenshot right now, go ahead. Take a screenshot if you wish, or write these steps down. Insert, indicators, oscillators, MACD. Can everybody see the trading platform? Can you see the trading program? Now, these are the settings. 55, 233, and 9. Okay. Step number 1, add an indicator MACD. Parameters 55, 233, and 9. Not seeing. Okay. How about now? Can you see it now? I'll repeat the steps. If you can see it now, great, great. Okay, here are the steps. Insert, indicators, oscillators, and MACD. Take a you can print screen, or you can take a screenshot, whatever. Again, this session is being recorded. If you want to review it again, you can see on our YouTube channel. So you go to MACD, and here there are 2 changes that you may have to do. Parameters. You've got a 55 setting here. Slow EMA is 233. MACD is 9. Signal is going to be set to none. It's not going to have a color. This is your step number 1. Step number 2, you go to levels and hit the add button. When you hit the add button, 0 line is going to come. I'm going to hit the OK button. Just grab an idea. This is how a MACD is used, or this is how it looks like on your chart. This is how it looks like on your chart. And everybody with me, now what I'm going to tell you and what I'm going to share with you is something very important. Okay, is everyone here? Just let's interact a bit. Let's interact. Everyone's with me here? Is everything fine? Thanks, Mr. Afzal. Mr. Vijay, great. He's with us as well. Mr. Shadi also with me. Awesome, awesome. Okay, now let's understand this first. Number 1, these bars, We have a zero line here. This is a zero line. These bars that you're seeing in aqua color, they are called histograms. They're all histograms. Okay? These bars are called histograms. Now, if the histogram is below the zero line, if the histogram, they are below the zero line, it is considered that the asset that you are trying to trade, whether it's currency, gold, silver, oil, NASDAQ, whatever, even a stock, it is considered that it is in a downtrend. Okay, it's considered to be in a downtrend. If the histogram is above the zero level, if it's above the zero level, the asset is considered to be in an uptrend. The asset class is considered to be bullish. Okay, now last point, and we'll end our webinar. Most often, when the first histogram is often formed, okay, most traders, they would take a buy trade. And when the first histogram is formed below the zero line, most traders would take a short sell trade and exit their buys. Now you have to do your own research. You have to do your own back testing. Use a demo account. You can use a practice account. And if you're looking for a demo account or practice account, you can visit our website. You can go to www.ncminvest.com. Okay, or I'm going to share our final slide with you. Let's go to the final slide. Here. Oopsie. The mouse jamming. No, it's fine now. Okay. So here is the contact details. Okay. So we've covered a sample method used by professionals. And if you have any detailed questions, you want to know more, if you want to open a practice account, you can please feel free to contact our representatives. We have their business cards, contact information, emails, telephone here on the screen. So I'm done from my side. I hope you enjoyed today's webinar. I hope you gained some value. And if you have any questions, please feel free to raise your hand and I'll answer all your questions. You can, let's have some question answer sessions right now, a quick one for next 5 to 15 minutes. If you have any question, just raise your hand. I'm going to unmute you, or you can even write your question in the chat box. To raise your hand, there is a reactions tab in your Zoom platform. All right, Mr. Vijay Nair is asking for the settings. Here are the settings, Mr. Vijay. Here are the settings. You need to add zero level, okay? And in the parameters, it's 55, 233. I can challenge, I can assure that these settings have never ever been shared anywhere over the internet, okay? So I'm that much confident. So MACD is a trend trading tool. It helps traders in analyzing if the market is bullish or bearish. And zero line helps it. Okay. Everybody, please don't feel shy. If you have any questions, you can ask. Just raise your hand. You can come over the microphone. I'll unmute you and you can ask your questions and we'll answer them for you. So do you have any questions? So again, NoorCM Academy is the subsidiary of NCM Investment, which is under the Schwa Capital Group. We are a regulated company. It's a regulated company with physical offices available globally. We have an office in UAE, Kuwait, Jordan as well, and in Turkey. So Mr. Afzal Ahmed is with us. Mr. Afzal, please go ahead. You can unmute yourself and go ahead and ask for your question.
Hi.
Mr.
How are you?
Shadi, you can subscribe to our YouTube channel and our Facebook and social media pages to be in touch with us, or you can contact the gentleman's contact details that I've shared with you. Yes, Mr. Afzal, please go ahead.
Hi, thank you very much for the session, first of all.
You're welcome, dear.
Okay, so you mentioned that this is your first session. So going forward, it will be on a regular session be conducted, or how it is?
We do conduct sessions for our clients because some of our sessions are for new audience, but we have regular sessions for our actual clients. We do our sessions regularly for the people who have customers who have a trading account with NCM Investment or subsidiaries. But to be notified, you can follow us on our social media pages. I'm just going to write in the chat box our social media page. So it is NCM, you can go to Noor CM Academy.
And for your clients, how often you have quick sessions? Like if I want to be
It's monthly. We have monthly 2 sessions.
Okay. And the timing will be around similar, right? Or it will
Sorry?
be in the morning. The timing range is similar in the evening
Yeah,
or in the morning?
yes, it's 6 p.m. UAE time.
Okay. That's
All right.
Thank you.
Any other questions? All right. Thank you, Mr. Afzal. Mr. Vijay, go ahead. I've unmuted you. Mr. Vijay, you can go ahead with your question. Mr. Vijay, I have unmuted you. It's good to have questions. Yes, I can hear you very well, loud and clear.
Yep, there are in fact many indicators, right? I mean, like RSI, along with MACD, then volume. So which are the main, I mean, what are the main indicators you recommend? Because it's not possible to load everything and look at everything. So
Correct.
What are key or main indicators usually successful traders use?
See, it depends totally on your trading strategy and a trading plan that you have your own, and it differs from person to person. Me personally, my preference is the MACD with the settings I've shared. But some key indicators that people may use are moving averages, exponential moving averages.
Okay.
All right. So, but there are different ways of trading. Like everyone have their own method. Some use the assistance and guidance of technical indicators. Some even trade on the naked chart, because many people, now I'm going to share the screen once again with you. Okay. So some people, what they do is analyze what is the average price movement of an asset, how much percentage and how it moves up, or how much percentage it moves down per day, per week, per month. When you understand the percentage movement of an asset, when it falls, how much percent it falls, goes up, how much percent goes up, it helps you in having some accuracy to your trading.
Okay.
Okay.
Yep.
Anything else?
Yeah, fine. I think we have the time. No, thanks for the presentation.
You're welcome, dear. You're welcome. Thanks for joining us. Okay, wow, that's good. Many scenarios indicators are lagging. How to overcome these situations? Very nice question by Mr. Randhir. All right, many indicators do lag. They do lag, but let me tell you something. When you see the histogram that's formed on the chart, right? This histogram is being generated by each and every candle. If you don't like this response, what you could do is try to learn price action trading strategies or understand the candle patterns. That would help you in avoiding the lagging indicators. But lagging indicators do help. They do play a decent role. Okay, Mr. Randhir. So you can overcome this kind of situation by adding the knowledge of price action. Okay. All right. Do we have any further questions? Okay. So let's end this session. I'm just sharing the slide again. These are our official representatives. We've got Mr. Viral Shah, Mr. Avinash, Mr. Anand, Mr. Alimullah here. Their contact details are here. If you want to take a screenshot, go ahead. We will upload this video on our YouTube channel of Noor CM Academy as well after the session is over. So thank you so much. And we did our best to answer as much as questions we can. We hope you enjoyed this session. And if you want to get in touch, you want to know more about our upcoming training programs and our training services or our trading services, feel free to contact us with shared details. Have a great week ahead. Have a great trading week. Take care and see you next time. Take care and bye-bye for now.